Welcome to weekly view on markets. Market was in consolidation mode during this week. Market lacks momentum to go higher, but it does not correct also in a big way. Regular buying by DIIs is providing enough support and liquidity for the markets. FIIs are selling continuously in the Indian markets, but FII selling is being absorbed by the DIIs. Quarterly two results of the companies so far are very tepid, and earnings growth is in single digits. That is the reason it has got a dampening impact on the market sentiment. Geopolitical situation continues to be precarious. Every day there is some news from uh, Ukraine front and also Israel and Hamas front. So that is keeping the market on the edge. Investors need to be patient till corporate earnings pick up. Basically, it is the corporate earnings which drives the market. Staggered investment and monthly SIPs in mutual funds are the correct method of investing at the present situation. Markets navigate the short term hurdles and always tend to go higher in the long term. That is why I am again and again emphasizing on long term investing rather than speculating in the market in the short term. Now, let us look at the performance of indices during this week. Nifty has closed at 24,854 and it has lost 110 points during this week. It's 0.44% loss. Bank Nifty has gained 922 points, that is 1.80%, closed at 52,094. Midcap Index has closed at 58,649, lost about 563 points, that is 0.95%. Small Cap Index consolidated with just 69 points gain and closing is at 19,077. Indavix has slightly cooled off. It is at 13.03. Now let us look at sectoral performances. There were equal number of sectors that was going up and also equal number of sectors which were going down. NBFCs, private banks, PSU banks, and realty interest sector, infrastructure. These are sectors which have gone up by marginal around 1.1%. Auto index has lost by around 4% because the auto sales number for the month of September were not good. The reason the auto index is correcting, and there is a large buildup of inventory in the automobile sector. Manufacturing has lost about 1.95%. Metals, media, FMCG, oil and gas, commodities all lost around 1%. Consumer durables and pharma also lost about 0.9%. Now let us look at our technical charts. This is the daily chart of Nifty. Here we can see Nifty has just closed around this support level, and the chart pattern formed by Nifty looks like a head and shoulder. This has bearish implication. If in the next week Nifty closes below this trend line, which is called neckline, then the trend reversal in Nifty can happen. So investors and traders needs to be cautious. Look around this. If Nifty closes below 24,500, then it is giving a bearish signal. There is a intermediate trend reversal. So investors need to watch for this. This is the daily chart of Nifty Midcap Index. Here we can see on Friday, Midcap Index has taken support from this around 58,000 level, and it has gone higher. This is shown by the green candle. So I expect Nifty Midcap Index to pick up from here in the next week from support level. This is the chart of Nifty Small Cap Index. Here also we can see Nifty Small Cap Index had gone below this channel and then again pulled back. Now it one day it has given correction, next day it is taking support at this lower band of the channel. So I expect small cap index to pull back from here, and if by any chance if it closes below this, then we can look for some more correction in the small cap index. This is the daily chart of Bank Nifty index. Bank Nifty index on Friday has shown good strength. It has taken support at around this trend line, and it has gone up. And basically, the big banks have declared their quarterly results, and the banking sector results are in line with the expectation. So that is the reason Bank Nifty has taken support around this level, and it is going up. Depending on the other banks' results that is coming in, we can see some recovery in Bank Nifty index in the coming week. Now let us look at some of the market fundamentals. CPI inflation for the month of September 2024 is published. It is at 5.49%. It is a sharp uptick from 3.65% in the month of August. So recently, RBI in their MPC meeting did not lower the interest rate. In the hindsight, I think they were expecting the inflation might go up. That is the reason they have not cut the interest rates. So we need to watch the inflation data in the coming months. Because of good monsoon, the food prices may uh, come down, and it will have a good impact on the inflation in the coming month. But we need to keep a watch on this front. RBI reserves is at 690.43 billion US dollars. It has slightly come down by around 704. It is down by around 8.39 billion US dollars during this week. But still, the reserves level, RBI reserves level is in a quite comfortable position. Forex rate is at 84.06 per dollar. It has slightly gone up from around 83.9 to 84.06. Dollar index is also at 103.46. Dollar index has also gone up, indicating that the overall demand for dollars across the globe is on the higher side. That is the reason we have seen rupee also weakening. Brent crude price is at $73.17 per barrel due to escalation in uh, Israel and Hamas conflict. Uh, Crude prices have touched $78 per barrel. From there, it has cooled to $73.17 per barrel. Gold price has seen a sharp jump. It is at 77,750 for 10 grams, 4 carat. Whenever there is a global uncertainty or escalation of wars, conflicts, etc., the gold price tend to go higher. This time also we have seen gold from around 74, 75,000 level has gone to 77,750. FIIs continues to sell in Indian market. In this week itself, they have sold 21,823 crore. DIIs have bought 16,384. DIIs continue to buy whenever there is a correction in the market. The DIIs are buying. There is enough liquidity in the domestic domestic investors. So they tend to buy and they are absorbing the selling by foreign institutional investors. So because of these dynamics, I don't see any big correction happening in the market. RBI has not changed the interest rate in the last MPC committee meeting. They have maintained the repo rate at 6.5. Quarterly results announced by the company so far are lackluster. They show a slowdown in the earnings of the companies. Market is supported by DII buying and the liquidity in the domestic institutional investors. This is the reason I don't expect any big correction unless some major global event happens. Investors have to be patient till the company earnings pick up. That may take another one quarter or more. Investors have to be patient till then. Mutual fund investors should continue their monthly SIPs. They should not worry about the volatility. If the market comes down, they are able to buy units at lower NAVs. They can accumulate more number of units. And when finally the market goes up, they will get benefited. So mutual fund investors should not worry about the market fluctuation or small corrections. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.